What's up, nut grabbers and butt havers? This is Max Pitts with Trades and Gains. Welcome back to another episode of Macro Talk. And we have big news this week. The producer price index, the wholesale inflation number, actually went down 0.1% in August. Yeah, finally, prices are going down somewhere in America, just not at Starbucks. $9 for a latte is still safe, folks. Now, Wall Street hears this and says, great news. Now the Fed can cut rates because in America, if workers lose jobs, the market goes up. And if producers stop raising prices, Jerome Powell does a keg stand. That's how economics work now. So here's what happened. Economists thought wholesale prices would go up 0.3%. Instead, they went down 0.1%. Core PPI, that's prices without food and energy, also dropped, which means if you take out your gas tank and your groceries, inflation looks like it cooled. But don't get too excited. Over the last year, producer prices are still up 2.6%, which means we're not exactly swimming in deflation. We're just slightly less screwed in this scenario. So the real story here is services prices fell 0.2%. And the Fed loves watching services because that's the sticky part of inflation. Goods go up and down, but services, like healthcare, insurance, car repairs, therapy to deal with your car insurance, those prices usually don't budge. So the fact that services actually dropped, that's like hearing Congress passed a budget on time. It just never happens. Wall Street absolutely loved this. Stock futures jumped, bond yields dipped, because the market now sees a 100% chance of a Fed rate cut next week. Yes, 100%. That's more certainty than Marvel movie bombing at the box office these days. Some traders are even whispering about a half-point cut, which is like when your doctor says you only need to quit half the cigarettes. It sounds good, but it's still not healthy. And of course, Trump is jumping in right away, demanding a big, beautiful rate cut because nothing says strong economy like begging the Fed for cheaper money. Trump keeps saying tariffs aren't inflationary. Yeah, sure. Tell that to tobacco prices, which spiked 2.3% last month. Cigarettes are basically the only product where you now pay more to die faster. Here's the tricky part, though. The Fed is stuck between inflation still above 2% and a weak job market. Remember, the labor revision showed almost 1 million jobs just vanished from the books? Yeah, like they were working for Enron. That is Enron level fraud right there. So Powell is sitting there going, do I cut rates? Do I save jobs or hold steady to fight inflation? Meanwhile, the White House is screaming, cut now. It's like a hostage negotiation, but the hostage is the entire U.S. economy in this case. Now, tariffs are still looming in the background. Economists worry Trump's broad-based tariffs could push back prices to the upside. But right now, wholesale inflation is tame. That's why markets think the Feds can cut rates. But if tariffs kick in harder, inflation could come roaring back. Then Powell will look like the guy who unplugged the fire alarm during the fire drill. And here's the kicker. The Fed hasn't cut rates since December of 2024. So this cut, if it happens, would be the start of a new easing cycle. Wall Street's already pricing in cuts, not just in September, but October and December too. Translation, Wall Street is basically betting Powell will turn into Santa Claus, handing out cheap money at every meeting. Now, politically, this is a field day. The White House is already spinning it as proof Biden's economy was garbage. The BLS can't be trusted, and Trump is here to save the day with cuts. The irony, if the Fed cuts too much and inflation comes back, Trump will then say, Powell blew it. In other words, Powell is going to get blamed no matter what. The Fed chair is basically America's designated driver. Nobody thanks him when he gets you home, but if you hit a tree, it's all your fault. So what is the key takeaway from this exactly? Well, wholesale inflation looks calm. The Fed has to cover to cut rates. Wall Street is already partying like it's Y2K in this case. And Trump is yelling at Powell to go faster. The problem, the economy is slowing, wages are soft, and we're about one bad CPI report away from realizing that bad news is good news might just be, well, bad news again. But hey, at least cast iron cookware is cheaper. That's the metric we really care about here on this channel. Anyways, thank you guys for tuning in today. Sorry I sound a little sick. I will catch you guys in the next video. Make sure you like, subscribe, share, turn on those bell notifications so you never miss a Trades and Gains video. And I will catch you guys in the next one.